You've owed back taxes to the IRS for years. Now you're finally ready to do something about it, to address the problem, and you hope you can somehow get a reduction of the balance. What about an offer in compromise? Turns out, you don't qualify. You figure your best option is a payment plan when you hear about something called a partial pay installment agreement that could potentially help you pay less than the full amount that you owe. But what is it? Do you qualify? What is a partial pay installment agreement? That's the topic of today's video on the other side of the break.
1-877 Levy King, Levy Levy King, 1-877 Levy King, LevyKing.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877 Levy King, LevyKing.com.
1-877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS liens, levies, and garnishments without paying the tax in full. How to set up the payment plan you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, and enter your name and email, and I'll get you a copy of the book right away. No charge, not even for shipping, totally free. Before we jump into today's content and go any further, I want to remind you to please take a moment to subscribe to our channel. And don't forget to smash that like button for the YouTube algorithm and hit that notification bell so you'll get a heads up each time we drop a new video. And don't forget, guys, we're also on Facebook and Instagram. Okay, let's dive into today's content. When it comes to resolving IRS problems, the offer in compromise gets all the publicity. Now, don't get me wrong. The OIC is a great tool to resolve tax debt because it allows you to potentially settle your tax debt for less than the full amount that you owe. But the vast majority of tax problems are resolved by setting up a payment plan. There are many different types of installment agreements. For a longer description of the various types of IAs, watch this video. The partial pay installment agreement is my favorite of all the various installment agreement types because it can be similar to an offer in that it allows you to potentially settle or potentially pay less than the amount that you actually owe. But it doesn't take quite as long as an OIC, and it's not quite as difficult to get approved. Now, to understand the partial pay installment agreement, you've got to understand something called the collection statute expiration date, also known as the CSED. To put it simply, the IRS has 10 years to collect tax debt. The 10-year clock begins to run on the date that the tax balance is assessed. So generally speaking, if you filed a tax return on April 15th of 2020, the IRS has until April 15th of 2030 to collect the balance that you owe. Whatever they fail to collect after the CSED becomes uncollectible, which literally means that the government cannot come after you to collect the tax. With that in mind, let's look at the partial pay installment agreement. A partial pay installment agreement is one where the taxpayer makes monthly payments that are less than the amount needed to pay the tax in full, plus the interest and penalties, before the collection statute expiration date. Authority for the partial pay comes from Section 6159A of the Internal Revenue Code, which provides that the IRS may accept an installment agreement if the agreement will result in a full or partial collection of the tax that's due. To get how this works, let's look at a partial pay compared to a traditional full pay installment agreement. I recently had a client that owed about $90,000 in back tax. The CSED was over 8 years away. The client called the IRS before they called me, and the IRS wanted about $1,200 a month to set up an installment agreement, which would pay the entire tax, the entire $90,000 balance in full, plus the interest and penalties before the CSAID date. This is called a full pay installment agreement. With a partial pay, the client's monthly payment is only $185 a month. She's going to pay $185 a month for the next 8 years for a total of $18,500. Once the debt expires, no further payments are due. The partial pay saves her over $70,000 compared to a traditional full pay installment agreement. Okay, so what are the requirements to get a partial pay? If you're going for a partial pay, the IRS is going to consider the following factors in deciding whether to approve your request. They're first going to look at your delinquencies, right? So the rule here is that all delinquencies for all tax years must be resolved with the partial pay installment agreement. You can't resolve some years and then leave others unaddressed. For example, if you owe for 2012, 2017, 2018, and 2019, you can't set up a partial pay for 2017, 18, and 19, but not include 2017. You got to resolve all of the tax years that you owe balances for at one time. The second thing is you got to be current, right? So you can't have any unfiled tax returns for previous years. You also need to be current with your withholding from your paycheck if you're an employee, or be current in making your estimated tax payments if you are self-employed. Okay. The next thing here is you can't have a really bad history of non-compliance. It's possible, although, it can really go either way, but it's possible that the IRS may not allow a partial pay installment agreement if you have a history of what they call egregious non-compliance, right? This means that the IRS is going to look back at your compliance history. They're going to look back at all of the years that you owed and whether you filed, did you not file, did you pay, did you not pay, and they're going to look at how long you've been non-compliant, and is there a pattern? Is it really a really bad pattern, right? And the net result here is if you got a long history of not complying or not paying, not filing or not paying, the IRS may not allow a partial pay installment agreement. The next thing is you have to make your payments until the CSAID. Okay, so that's going to be the really important thing about a partial pay. Okay, so while you're going to set up payments and make monthly payments, they still have the same 10 years to collect. And though those monthly payments are going to be smaller than what they would be with the full pay, it doesn't extend the statute. Okay, so if they have the same period of time to collect, but your monthly payments are going to be a lot smaller, the net result is you're going to pay some of what you owe, but some will be forgiven, right? That's why they call it a partial pay, right? So the key takeaway here from this provision is that you're going to set up monthly payments and you're going to be paying until you hit that CSAID date, but you're going to be paying an amount that's lower than what's required for full pay. The next requirement here is that you cannot have equity in any of your assets, right? You can't have any net equity in assets, right? And the asset that we're generally talking about here is your home, okay? So if your home is worth more than what you owe on it, then you have home equity, okay? So home equity generally poses a problem for a lot of the IRS resolutions here. So what you're going to have to do is either A, liquidate the asset, or B, take out a loan and borrow against the asset, so you borrow that equity out, or C, demonstrate to the IRS that you're unable to do either one of those first two things that we just discussed. So you would have to either sell it, take a loan against it, or demonstrate that you can't sell it and you can't take a loan against it, and that the IRS should consider it to be a disregarded asset or disregarded equity. That can get a little bit involved, but what I think I'm going to need to do for purposes of explaining that a little bit better is give it its own video. So we'll do a separate video on how you get them to disregard equity and assets, because that seems to be a sticking point for a lot of people. Right. So the next thing up is defaults. This one is pretty simple and straightforward. You can't have defaulted on an IRS installment agreement within the last 24 months if you're hoping to get a partial pay. OK, so we get a lot of people that come into the office and they have a history of calling the IRS on their own, setting up a payment plan, and then before the payment plan is fully completed, they'll default. They either default by not making the payment or by racking up additional tax debt, which defaults the payment plan, or by not filing their tax returns, which also defaults the payment plan. So the thing here is that to get a partial pay, you cannot have defaulted on a previous IRS installment agreement within the last 24 months. Okay. So in summary, a partial pay installment agreement helps to solve an IRS problem by reducing your monthly payment to an amount that you can comfortably afford while the 10-year clock continues to run. Eventually, the tax debt will expire and you will not have paid enough to pay the debt in full. A partial pay installment agreement can produce outcomes that are similar to an offer in compromise, but the major difference here is going to be that an OIC, an offer in compromise, reduces the debt itself, whereas a partial pay reduces the amount of the debt that you're going to repay. They're both strong options to help get rid of tax debt. They just work a little bit differently. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? No two cases are exactly alike, so how do you know exactly how much you can settle for? Well, I've created a free tool to help you figure that out, to help you get qualified for an IRS fresh start. Just head over to my website, www.levyking.com, or click the link below, follow the prompts, and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. That phone number again is 1-877-LEVY-KING. All right, that's it for this week, guys. Talk to you soon. Bye-bye.